St. Louis was the Spirits.
The Spirit, St. Louis.
Back when they would name basketball teams after airplanes from 40 years ago.
Yeah.
We need to get back to that.
Welcome to the Invisible Capital Podcast with PitchBook, where we shine a light on the traditionally opaque private markets. Here are your hosts, Adley Bowden and Adam Lewis.
Welcome, everyone, to the Invisible Capital Podcast. We're devoting Season 1 to examining the private markets by discussing the work of PitchBook analysts and writers during the COVID-19 pandemic. I'm Adam Lewis, a private equity reporter for the PitchBook newsletter, and I'll be joined today by Adley Bowden, our head of editorial and our institutional research group, along with PitchBook news editor and the author of our weekend newsletter, Mr. Kevin Dowd. Kevin, thanks for joining us.
Hello. Thank you guys very much for having me.
Yes, very excited for this episode because we'll be talking mostly about sports, which Adley and I and yourself obviously have a great interest in. Can you just touch real quick before we get into everything on your role here at PitchBook? Because I don't think just calling you an editor probably does it justice.
Yeah, sure. I am the editor of our private equity and M&A content. I've been doing that for a few months here now. Before that, I did some other editing of general content and did some writing. And then, I also write our weekend pitch newsletter. It goes out every Sunday, kind of tries to offer up a recap of the last week in the private markets, kind of synthesizing some different themes and trends that have been going on. That's pretty much how I spend my time.
Well, Kevin's recent feature is about Spencer Dinwiddie, a shooting guard for the Brooklyn Nets, who's gained a lot of headlines over the past few months for both his enthusiasm for Bitcoin as well as the fact that he's dabbled in the VC space and, had some early success. So, Kevin, what were some big takeaways from your interview with Mr. Dinwiddie?
Yeah, kind of the main thing I would say I took from it is that he is kind of interested in doing a lot more than dabbling, I would say. He is recently, I think, early this year, officially launched a venture firm called Eonxi with a guy named Sherrod Harrington, who has been a longtime friend and collaborator of Spencer. They go back to when they were both student athletes at the University of Colorado. It seems like very much, often you hear these professional athletes that are getting in on investing, whether that's just acting as an angel or kind of forming their own firms with other veteran investors. And maybe there might be, acting a little bit more like a figurehead in some ways. Maybe they're just kind of giving their opinion on some deals, letting the other deal makers handle a lot of the other stuff. But it really does seem like Spencer is fully embedded in this firm. He is a full founder of it. He's making decisions on what kind of tech they are looking at, making decisions on what kind of founders they're looking at. And this is really like stuff that he has thought about for a long time, has studied for a long time, and is really intelligent about, as far as I can tell. He knows what he's talking about with this stuff. It's not like a hobby for him, not a little side project. I think he is very passionate about this stuff, knows what he's talking about. It was fun kind of getting to pick his brain a little bit about what they've been up to and what they see coming down the line. And as you mentioned, kind of some of those little Bitcoin related projects he has been having in the works lately.
As you're talking with him about, I believe it's sort of the venture studio as well as the venture firm they've set up. Mm-hmm. Do you get a sense of what the mission was, what they ultimately want to accomplish? Is that something that he sees outliving his playing career?
Yeah, so it's definitely Eonxi, kind of the larger umbrella, and then they've got their startup studio and a venture arm, both kind of operating separately within that. And I think the mission of both is largely they're raising outside capital. They're a venture firm, but there also is a real kind of marketing focus to it. Influencer marketing is kind of in particular. Some of their early efforts have been kind of based around that idea that influencers kind of have, and I think a lot of this is driven by Spencer's own experience, obviously being an NBA player, being someone with, I don't know how many it is, tens of thousands of Twitter followers, someone who people pay attention to, just kind of seeing the power that can have on products and on companies and kind of just being able to get the word out there. And I think a lot of what they are trying to do is bring that sort of idea and that expertise and their own networks and reach to other influencers, founders, investors even, kind of in particular in the gaming and sports and entertainment sectors are kind of where their focuses are at. I do, as far as what Spencer and Sherrod both, how they see this as a long-term thing. I think it is not a side project at all. It's very much, I think, what Spencer sees himself operating in this space in some capacity for the foreseeable future. His this kind of ties into the story I was working on. His Twitter bio, at least as of this speaking, is just a tech guy with a jumper, which I think kind of is a pretty good job of describing how he sees himself. He obviously acknowledges that basketball is kind of where his bread is buttered. That is why he gets to do what he does. But he also that's not all he's interested in. And that's not all he is. I think he really sees a lot of himself in a lot of the tech and investment world, and would like to explore that as much as he can.
Yeah, Kevin, I thought you outlined really well in your story how, his NBA career has really taken off over the past couple of years. And once we get back from COVID-19, he will be a key contributor on a team with, Kevin Durant and Kyrie Irving that has a chance to get to the NBA Finals. But that being said, has he spent this time off while the NBA shut down because of coronavirus, ramping up efforts for his firm?
Yes, definitely. We kind of talked about that a little bit when I spoke to him a couple times. Just it's kind of, he put it like there's only so many hours of the day that you can spend working out and running and shooting, right. And then there's other hours left in the day that he's not used to having. And I think this has he's a father as well. That has been at the top of his priority list. But yeah, besides that and staying on top of basketball, I think he said this is basically what he's been spending his time doing. And we kind of talked in a little bit about that too, just the when basketball is going on, how he balances the two sides of it, being a world-class athlete and also trying to be a world-class investor, I think is his goal. A lot of the other parts of life he has kind of cut out as far as going out and hanging out with people and doing other more social things. It's kind of his basketball, family, and doing this is kind of the way he put it, the way he is spending a lot of his time. He's used to that, and then having the more hours in the day lately, it seemed like for both him and Sherrod for the firm, they've been making some new hires, kind of getting some new initiatives going. As I think I mentioned, they're just kind of in the early months of getting it off the ground. So lots of sort of those early decisions to be made and hires to be made and strategies to be undertaken and all that sorts of stuff.
The rise of the athlete investor has been a big storyline over the past decade.
Sure.
Whether it be Serena Williams, Aaron Rodgers, kind of following it into venture capital. You've got, Ronnie Lott, you've got Next Play Capital, we've got Lance. There's, it's a well-trod path, if you will. Do you think this COVID-19 pandemic is going to separate the athletes that are serious about this versus the athletes who just kind of want to use it as a figurehead, or it's, kind of a promotional deal for them?
I think there's maybe could be some ties there, just as far as seeing who is kind of putting more time into this and who is not. But I think maybe even more so than that, it could sort of be in some ways an impetus to get other people other athletes into the investing sphere. It's kind of having some time to put things on pause and talk to other people in their worlds and see what they're doing. It's obviously not really the same thing, but it's like in the NBA and here early mid-June, there's been a lot of players getting together on calls and talking about instances of social justice and kind of what the best ways to approach things like that are. I think there have been, from what I have read and heard, lots of kind of more collaboration between athletes and just talking about things in life and work outside of what's going on the court, on the field. I see this too, obviously, with Major League Baseball and their kind of ongoing struggles to figure out what they're going to do. And two, just the fact of living through a time of some severe societal stresses and people getting sick and dying. I think it's a time when a lot of people have been thinking about other things besides what they normally think about. Probably when I do not know from firsthand experience, but I think if you're, a professional athlete, world-class athlete, it's probably easy to kind of get in a tunnel and just be focusing on what you're focusing on. And for good reason, that's your job. That's how you're getting by. But I think maybe this has been a time where some people have thought about other things they would like to do with their time and in a lot of cases with their growing fortunes.
Did Spencer mention if anyone else had reached out about securitizing their contract on the blockchain?
Did not mention if anyone else has reached out. But that should I maybe dive in to kind of explain a little bit about that
what's
whole
the
story?
Status of that? I don't even understand.
After
having read through it.
Last November, I think it was, Spencer announced plans to essentially tokenize his NBA contract, turn that into a security that accredited investors would be able to then invest in. I think it was definitely not for everyday investors. I think you had to have, some sort of six-figure level of money at hand that you're playing with. yeah, the idea was basically turn his contract into an investment vehicle in which investors could buy stakes, essentially. And then as the contract progresses, I think on a monthly basis, it would pay out a principal to kind of returning the investment. And then there would be interest in that as well. I think there was the initial plan. So if I'm recalling this correctly, the third year of Spencer's contract has an opt-out clause. And so the idea was that he was pitching that so if he were to opt out of that year of the contract and then sign another contract that was more money, that would kind of provide some real financial upside potentially to investors. I think the NBA, I know the NBA did not like that. I think they considered that gambling and kind of intervened and eliminated that clause. But eventually, Spencer and his team and the NBA got to a common ground. I believe it was like in late January that they launched the offering. That is a thing that is out there now. Investors can, buy stakes into that tokenized contract. As far as I know, the first time it has ever happened. It's definitely somewhat similar to, like the late 90s, Frank Thomas tried to split up his $25 million baseball contract. He played for the Chicago White Sox. And I can't remember what exactly it was called, but he had some sort of system where he was trying to sell off stakes in his contract. And obviously didn't really catch on. So Sherrard and Eonxi, they are hoping that this is the start of a real thing. When I asked Spencer about it, he just went off for about 3 minutes straight explaining all the details of it, like when, why it makes sense, why it works. They have this thought out there, believe in it. They on the website for this platform, they currently have a box up saying they completed the athlete or the offering for Spencer under an athlete tag. And they have a couple boxes next to it with big questions marks in it, like the entertainer, the influencer. So they're definitely planning on trying to do this sort of thing for more people as a way, both to kind of get interaction with fans. And then I guess the upside for Spencer, why he would want to do this. So I think it's a 3-year, $34 million contract. I don't think he was necessarily securitizing all of that, but say he was able to sell that immediately, then that's $34 million he's getting right now instead of over the span of 3 years. When you're someone like him who is, he's making investments, doing angel investing, if you think that you could do things with that liquidity now, that it would be more beneficial than having that come along in chunks in the years, I think that is sort of the appeal of it and kind of the pitch to the entertainers and influencers of why it might be a good idea.
So once he sells a portion of his contract, would the risk then fall on the people who had purchased a stake in it?
Correct. And the idea for, at least, for him specifically, NBA contract, that it would be pretty low risk. NBA contracts are guaranteed. Let's see, Patrick Mahomes were going to do this, that would open up a whole other can of worms because NFL contracts are very different beasts and the amount of money that they announce is often not the amount of money you're getting. And I think really the only kind of, as far as I understand it, the only real potential downsides would be if there was an NBA lockout and contracts were not getting paid.
A pandemic.
Some sort of large scale disruption to how the league operates.
Gotcha.
Is pretty much so. I think that's basically the bet as far as an investor. Yeah.
It seems like other financial institutions must do that. That these players take contracts to banks and structure something similar. So
I do. The leagues are very, very on top of it. I didn't really get too deep into the details of their negotiations and stuff, but it sounded like there was some real, NBA had some concerns.
Yeah.
But I think largely just about, kind of the presentation of it.
Yeah.
But there is too, to some degree, as Spencer laying out the argument of part of what the NBA is, how it functions and what their utility is basically is kind of serving as a gatekeeper between the fans and the players. And kind of think the way he explained it, the players are the asset in a professional sports league. They're the reason it exists. And so the way he sees it, doing this kind of the tokenization is a way to cut out the middleman of the league in some ways and allow fans more direct access. So, and I think obviously if the idea is to kind of take away some of the power from the leagues, I think just the way, psychology and multi-billion-dollar businesses work, they're probably going to be opposed to measures that might try to take away some of their power. I think it's very much in the early days of really determining what that would look like and how that might what the impacts might be if this became more of a trend. But I think that's definitely an angle of it too.
Kevin, why do you think there's been such a trend of just a broader trend of all of these Wall Street investors and Silicon Valley investors kind of just pouring into the professional sports scene?
Yeah, I mean, always since there have been professional sports, I think businessmen have always been drawn to it, largely as a vanity project. You get your names on there for this fun thing that everyone loves to do. You get your box, you get your courtside seats, whatever it is. But yeah, for sure, I think in the last 20, 25 years, there has been a real growing body of ownership, maybe even more recent than that, maybe the last 10, 15 years. Yeah, like you say, Silicon Valley, private equity executives, Wall Street executives, looking to buy these teams, not necessarily just as, oh, look at me, I own the Golden State Warriors, but as a real investment and a way to grow money in a pretty insane way. I mean, I think take, for example, Philadelphia 76ers, probably one of the more prominent ones here. They were acquired in 2011, I believe, by a group that's led by Josh Harris, who's a co-founder of Apollo Global, and David Blitzer, who I think is head of strategic opportunities at Blackstone. He's an tactical, high-level executive at Blackstone. They paid $280 million for the Sixers 9 years ago. I think Forbes' most recent estimates peg the team value at like $2 billion plus. And that sort of growth has been going on across the NBA. To a lesser degree, I think across Major League Baseball and NFL. I think NBA team values have been growing the most over the last decade. Maybe don't quote me on that. But point being, all the leagues' team values are going up. MLB in particular jumps out as one where they just have these massive TV contracts that are locked in, guaranteed revenue streams. You're running millions of people through your ballpark every year. So really, like as you kind of mentioned a little bit ago, until this pandemic came along and shook things up, it had been a pretty solid 20 years of unimpeded growth as far as financial prospects for these leagues. So yeah, I mean, if you're a venture capitalist, private equity investor, you're trying to get these 2, 3, 4, 5x kind of returns. Obviously, those industries themselves are growing, getting more crowded. Markets have been in such a bullish state for such a while that valuations of other companies are going up. You know, probably trying to buy into some teams, or even in Europe, like buying into leagues, buying into like international rugby competitions that are held every year. I think probably just the finances there, that kind of confluence of factors has made it more and more appealing.
Yeah. Harris and Blitzer, they're trying to buy everybody right now. They're trying to buy, I don't know if it's official yet, but they're trying to buy a stake in the Pittsburgh Steelers. They're rumored to be interested in buying the Mets after Steve Cohen, the big hedge fund guy, backed out. Was it Steve Cohen? I'm not sure.
It was Cohen.
Yeah.
No, it's
so it just seems like more guys are filing in.
Yeah, Harris and Blitzer, I think it's quite possible that in several months, if talks end up going through, that they could own full stakes of teams in Major League Baseball, the NHL, the NBA, and the English Premier League. And then, like you said, own a stake in the Pittsburgh Steelers. So they are I think they, more than anyone else so far, is checking off kind of all the boxes there.
Wow. Have any of the leagues or teams turned to private equity or venture capital in kind of this COVID issue and finances? I mean, the leagues have been taking huge hits. Teams have been taking hits. What have you seen?
Yeah, I believe it was, I think the one that immediately comes to mind, that Blackstone was reportedly in negotiations at one point to give a loan to Serie A, the main Italian soccer league. And then there have been other firms, I think CVC Capital, have been in talks to make an equity investment in them. And then also maybe not exactly tied to because of the COVID-19 pandemic, but has come up in the last couple months that the NBA, I think Bloomberg reported, they are in pretty deep talks with Dial Capital Partners, which is an arm of Nyberger Berman that focuses mainly on buying GP stakes. So they buy stakes in other private equity firms. And so anyways, NBA has been in talks with Dial about raising a $2 billion fund that then would be used to buy stakes in multiple teams in the NBA, which is currently not allowed for an investor to own stakes in multiple teams. This would be kind of a change in how they operate. And the idea there, as far as I can tell, just a couple of different ones. With valuations rising, it can be harder and harder for investors to find co-investors on things. There's only so many people out there who can cut a $200 million check for a sports team. And also just, again, as for these owners who have been holding teams for quite a while, and maybe some of them, who have more of a investment bent to this, they're in this to make money, not like, say, the Rooney family that owned the Steelers for decades, and as more of kind of a steward of the public trust. As those sorts of owners are looking for some liquidity and to get some returns from their investment, then I think the idea that Dial would be able to buy minority stakes kind of on a secondary market like that. So kind of serving a couple of different functions there as far as basically greasing the wheels of kind of that team ownership economy in the league.
It'll be interesting to see if the move from GP stakes to NBA teams is a little bit of hubris on the part of Dial Capital worked over there or not, or if they feel like, there's some similarities and, revenue streams. I know our analysts have done a lot of work trying to kind of analyze private equity fund revenues and its streams. And, if teams are sitting on different streams of capital, I suppose there's a similar deal to be made there. So it's going to be interesting to see how that one turns out.
And yeah, definitely too, just again, to kind of circle back to the MLB, as we're seeing like a league there, maybe, I don't think this has been good for their financial future the last couple of weeks. I think that's probably safe to say. Just kind of opening up kind of a window into what could happen if, I don't know exactly what that situation would be, but if things go bad for the NBA, you're Dial, you're sitting there, you've got stakes in, I don't know, 6 different teams. If all those kind of start to decline in concert. That's not something that has happened since the Selner brothers in the ABA back in the day. But it's I think it's definitely something that I'm sure there are some people in that firm that are thinking about.
Yeah, I talked to an investor I can't name because you're not supposed to market your funds before they, are announced because of SEC regulations. But maybe about a year ago, he was trying to put together a fund that would buy passive stakes in MLB teams. But I haven't checked back with him yet. But I can't imagine it's maybe it's going well now because some of the valuations have dropped and it would possibly be more appealing. Or there's obviously the public perception of the MLB right now is probably at an all-time low, so maybe not so much. But
yeah, for sure, it's a lot of interesting financial storylines out there. Yeah,
what are the key sports business type storylines you'll be looking at here in the next couple of weeks as more leagues try to get back to playing?
Yeah, I mean, I think we've probably covered MLB enough at this point. Definitely interested to see the NBA as well. As of this recording, they are planning to come back in Orlando and resume action there. Also, as of this recording, I think Florida is seeing new spikes in positive COVID-19 testing. And there seems like increasing conversations among players and people in those communities about whether that is the best move for all of them to do, to go down there and kind of live in a bubble for a few months and play out the season. So not really a direct tie there to finance, but just the business implications of that. If that does fall through, what that would mean for the CBA, for future television revenue, for player contracts, kind of the same stuff that's going on in MLB. Probably the most interesting little moment here in a really long time as far as American professional sports and like labor relations with ownership and how that is all playing out. That's definitely one that jumps out to me. And then just one more to circle back to the firms raising funds for sports. Another one I should have mentioned a while ago. I think it's called Arctos Sports Partners. It's a firm that they had registered with the SEC. I think it was like $500 million. And then there were some reports coming out that they were trying to raise up to 1.5 billion for a fund that would acquire minority stakes in like a bunch of various different professional sports teams in different leagues. Kind of the minority version of the Harris Blitzer strategy, not buying majority stakes in teams. So that I'm definitely interested to see how that fund comes along. I think as far as I know, that's kind of a first of its time thing. And it'll be interesting to see what kind of opportunities are out there for them and kind of what strategy they end up going with.
Yeah, well, we will certainly follow that closely as we hopefully get back to something a little closer to resembling normal life. With the return of pro sports, even if there's no fans. Kevin, thanks so much for joining us for today's episode.
My pleasure. Yeah, thanks for having me. It was a fun time.
As always, you can go to pitchbook.com/podcast for the show notes and other relevant materials. I'm Adam Lewis.
I'm Adley Bowden. Thanks again for listening to this episode of PitchBook's Invisible Capital Podcast.
I can tell the story about the themed T-shirt I'm wearing.
Okay, let's hear it.
So it's I don't know if you can see it, Spirits of St. Louis, the old ABA team, which is the subject of my favorite sports business story ever. So like when they were merging with the NBA in 1976, there were 7 teams in the ABA left at the time, and the NBA was only going to take 4. So one of those 3 that was getting left out, they just kind of like folded up shop and quit, and their owners just walked away. I think one of them took like a $3 million buyout payment. And then the 2 brothers who owned the Spirits of St. Louis decided to play hardball and managed to negotiate themselves a deal to receive 1/7 of all broadcast revenue from the 4 teams who were going to go into the NBA in perpetuity. So there was not a national TV deal at the time. There wasn't like for another 5 years. But for the last 44 years, I think it amounts to like 2% of all NBA television revenue has gone to these 2 brothers who never owned an NBA team and were never affiliated with the NBA whatsoever. And I think they've made like $350 million off of it by now.
Wow. That is incredible.
Just ask for some pennies and it's amazing.
Yeah.
That foresight.
That's what they should have made Semi-Pro about, the Will Ferrell movie.
I think it was definitely an inspiration in some ways. Yeah.
That's amazing.
There's some real overlap.